All right, so we're going to kill two birds with one stone here in this video. Free of charge, my friends. Had a guy from the United States Postal Service that emailed me saying, help, how much is my taxes going to be? I have $2,000 USPS pension. I got my TSP that I'm going to take $1,700 a month out of. And I got my Social Security, which would be 2019 if I file at 64. And he says, I'm single. How much will my tax be? And that's what we're going to talk about. But the part two of this is we're also going to show you the difference in taxation on Social Security as well. Had a lady, a friend of mine actually say, she goes, when she saw my one of my emails I sent to my subscriber list, I said, look, if you have 3 sources of income and 2 of those sources of, and one of them being Social Security, and those other 2 sources of income are tax-free, you pay no taxes on your Social Security. And this lady was like, yeah, Social Security is taxable. I said, not if the other 2 are tax-free. In this case, Roth IRA and a reverse mortgage. If you have income from a Roth, a reverse, and Social Security, none of them are taxed because they're all tax-free. Now, in this case, we'll show you the difference, but we'll also show you some strategies on how to reduce your taxes and your Social Security as well. So, all right, don't forget to subscribe down below to Heritage Wealth Planning, the place you come to learn all about taxes and retirement and how Social Security benefits can be manipulated to your benefit, my friends, and less to the IRS. All right, so don't forget to subscribe, comment, share the video, of course, and give me a thumbs up as well. All right, so what do we got here? How much is all that total right there? We got 2,000 plus 1,700 plus 2019. We're going to times that by 12. Times 12. And we got 68,000 a year of income. Now, most people, hopefully, well, I don't know. Less astute financial planners would say that will be you're in the 22% tax bracket. And what they do is they say, we'll take 68,628 times by 0.22. And that would mean your taxes are $15,098, which is just 100% wrong. And it's actually silly, 098 to do that, because they're not using marginal tax rates and they're not using a standard deduction. So more astute financial planners would use a standard deduction, and they'd times that by 22%, and they'd say your taxes after a standard deduction, 58,628 times 0.22 is actually $12,898, and again, that's wrong. Both those are wrong because now they're not breaking it down between the marginal tax rate. So we got 58,988, 58,628 minus 9,000 because that's at 10%, and I'm not going to give you the whole calculation. Then we got the next, let's see, 38,000 roughly, and it's not too specific, but roughly. 58,628 minus 38,000 minus, so 38,000, bear with me just a second, minus 9,000. The next 26,000 is taxed at 318 at 12%, and then whatever's left over from that. So we got roughly 20,000 is at 22%. All right, so that's how this would work. Well, we'll just figure this out. So we'll just do that real quick. So we got 20,000 at 22%, 4,400. 26,318 at 12%, 26,318 times 0.12 is 3,100. And again, this is not too specific, but you see where I'm going with this. $900 you add them all up, plus 900 plus 4,400, and the actual taxes in that regard are 8,458, which is significantly lower than what the other two guys say. But even that's not right. Why? Well, because remember, Social Security is not taxed dollar for dollar. Only 85% of Social Security is subject to taxation to begin with. Now, I know, so we got to keep that in mind. So what we got to do then is we got to figure out, like we always have to do, our provisional income, because that's what determines how much of our Social Security will be taxed, all right? So in this case, let me make sure that's nice and dry. All right, so we're going to do provisional income. And the first thing you got to remember, this guy's single, okay? So provisional income rules for a single guy, 0 to 25 of AGI, is actually MAGI, is nothing. 25 to, was it 34? 32? Yeah, 34. equals 50%, and anything above 34 is 85%. All right, so the first thing we got to do is we got to figure out our provisional income, which determines how much of a Social Security's tax. All right, so we got 24,000, because that times that by 12, and we got whatever that is, 1,700 times 12. That's 20,400. All right, and then we take half of our Social Security. And 2019 times 0.5, 1,000 is 2,000. Yeah, 2019 times 0.5 times 12. Excuse me, 12,114. All right, so we add all those together, plus 20,400 plus 24,000. And our provisional income is 56,514. What does that mean? That tells us how much of our Social Security be subject to taxation. All right, so the 56,514 minus 25,000, because that's zero. That's going to leave us, what's that? 31,514. So basically, I'm sorry, what do I do there? Bear with me just 1 second. So the next of that 31,514, 9,000 of that would be tax minus 9,000 times 0.5, which leaves us, there's a method to my madness here, my friends. Bear with me. 31,514 minus 9,000 leaves us 22,514 times 0.85. So that's going to be 4,500. And 22,514 times 0.85 is 19,136, which is 80. So, okay, so basically what happened here is when we factor in your provisional income, the most you're going to pay in Social Security taxes is 85% of this, or your provisional income, whichever is the less. So basically in this case, our provisional income, and this, when he makes $56,514 in provisional income, that means 24,000 roughly of his roughly 24,000 of his Social Security be subject to income tax. But it doesn't work like that because he's only making 20 odd thousand. No, yeah, but how much is he making actually? 20,000. He's only making 2019 times 12. 24,000 total. The most that he'll pay in Social Security taxation is 20,593. So in this case, his provisional income is more in terms of how much Social Security be subject to taxation than 85% of this number right here. Does that make sense? That's critically important to understand. The most you're going to pay in taxation on Social Security is either 85% of your total benefit or whatever, and when you figure out the provisional income is, whatever is less, that is the most you'll pay. So in this case, we know he will pay tax on 20,593. So let's go back this. We just did the provisional income numbers, and we know that it's not going to work for him in terms of his ability not to pay much money on Social Security. So here he's going to have $24,000 here, 20,400 here, and then his Social Security taxes will be 20,593. So in here we got 993 to 64,993. It will be his AGI. You subtract his standard deduction, and you're going to get, what's that, 52,993 is his taxable income. All right, so that's a little bit less than what we would anticipate before. So 20,001. So before we had taxable income, before we had 2,019 times 12 plus 20,400 plus 24,000. Before we had taxable income, minus 12,000. About $4,000 more than that. So just using the Social Security tax benefit, we saved $4,000 on taxable income. But that's not what I'm shooting for here. So with this guy, I know he's going to pay, I can't remember what I put in taxes. What do we say? Something like $7,000 to $8,000. I know as we sit here today, with this number right here, he will pay roughly $8,000 in federal income tax. And again, we're going to use a tax calculator to show you what the California tax would be on top of that. We're not done though. We're not done by any stretch of the imagination. Let's say in this case that he decides not to take Social Security or take this TSP right out of the gate. All right, so let's say he's not going to take that TSP. He's only going to take his Social Security, or even better, you can say, let's say he's not going to take his Social Security to 70, which is probably what I'd recommend. But let's say he's not going to take his TSP until he's 70. All right, so now we got, what do we got? 2019. So now we have 2019 times 12 divided by 2. We got 12,114. So we take these 36,114. That's his factor to figure out what his provisional income is. The first 25,000 is tax free. So we got 9,114, of which 9,000 is taxed at 50 cents, and then $114 at 85. So 114 times 0.85. 97. We'll just say $97. So basically, of his Social Security, he's only have to pay tax on $45.97. All right. So you with me so far? So there's a method again to the madness here. He's going to pay tax on $45.97. All right. So $45.97. $45.97. 24,000, which is that here, and then 45,997, because that's his taxable, his provisional income, showed us how much of his Social Security is subject to taxation. So in this case, we got 28,597. That's his AGI. All right, now we subtract our $12,000 standard deduction, and we have 16,597. So he's now just in the 12% tax bracket. That's it. He's in the 12% tax bracket. But again, the first 9,000, 10% or $900. This amount right here was at 7,597, 12%. So 7,597 times 0.12, $911. So he's going to pay $1,811 in federal taxation right there. Now, I know what you're saying. It's like, oh, but Josh, he still need that money, and maybe. But the difference between $1,800, $1,811, and what was it, $8,000. So this is what I talk about all the time. In fact, I talk about my book, The Tax Bomb. So he's got $1,811 here in tax. So let's write this down. $1,811 versus, I think it was $8,000. All right. So bear with me just a second. All right, so actually, let me do something. Let me clean this up a little bit. $1,811 is what he's paying tax. All right, right now, and that's before he hits 65. Once he hits 65, he's going to get another $1,600 in standard deduction from the feds. So $1,811 is what he's paying right now. Let me get this a little bit drier. Oh, an old T-shirt. Yeah, there we go. Nice. All right, so he's paying $1,811 on how much income has he got? He's got 24,000 here, and he's got 24,222 here. So let's just say 24,228 here. So 1,811 tax on 48,228 income. When we had the TSP coming out, he had how much tax? Roughly $8,000 tax on this 20,400. 20,400 plus 24228 plus 68,628. So a difference of $20,400. So $20,400 more in income from that TSP made his tax go up by 8,000. And again, I'm not sure exactly 8,000, but let's just say that 1,811 by 61,89 increase in tax. So what do? We take 6189 divide by 20,400. And that was a 30%. That right there causes him a 30% tax bracket. 30%. Again, that's not exactly to the dollar, but I hope you're getting the gist. 30% tax bracket for a guy who's in the 22% tax bracket, marginal tax rate. How's that work? Because we've made his Social Security now subject to taxation. In this scenario, only $4,000, $4,500, with 40, that's like $4,900 of his $24,228 of Social Security was taxable as ordinary income. That's it. In this scenario, when he's not taking TSP out, or better yet, the TSP is coming out tax-free or a reverse mortgage, he only had about $4,900 of taxable Social Security. In this scenario, when the TSP is coming out as ordinary income, 85% of that $24,000 of Social Security is subject to taxation. So not only is he increasing taxes on this, does that mean he's got to pay tax on that, but now he's got to pay tax on another $16,000, $17,000 of Social Security income, which means he's in a 30% tax bracket because this guy's coming out. It's nuts how the tax code works. I've said this a million times a Sunday, and I'll go up there and show you what it looks like with California, but this is what I'm talking about. If you don't understand the tax code, you're making a huge mistake because you're not in the 22% tax bracket. A, there's marginal tax rates, 10, 12, 22. Absolutely. Understand the marginal tax rates. B, there's standard deductions, 12,000, 13,600, 24,000, 26,600, depending if you're single or married filing jointly. Figure that out. Secondly, Social Security has a tax favorability. Either it's 85% of your taxes, or when you factor in the provisional income, whichever is less. So if you have provisional income, which we only have $4,800 or $4,900 of Social Security taxation, you're still getting this amount of money, but you're not paying tax on it. You're only paying tax on $4,900 of it. If you have provisional income that's so high, for 85% of your Social Security's tax, you're still getting this amount of money, but 85% of that's taxed. Do nothing more than just how the TSP is coming out. TSP is coming out as ordinary income. It's subject now that to taxation plus this to taxation, even though you haven't increased your income except by that. And this is the tax code in a nutshell. So this guy now, he pays $8,000 tax on $68,000 of income simply because he had this $20,000 coming from Social Security. So, I mean, literally, it's a 30% tax bracket. And I talk about in my book, and I don't think I have a copy there. The tax bomb in your retirement accounts, I don't. But you can get it on Amazon or you get it on my own website. I can't remember how much I charge. I think I charge $7.99 for a paperback, $4.49 for the Kindle version. But that's it in a nutshell. So again, if this comes out tax-free, either through a reverse mortgage or Roth 401k or Roth IRA, he only pays $1,800 and $11 of tax. In this scenario right here. Okay, that's the deal. If this comes out taxable as ordinary income, he pays a whole lot more. So in this case, I'd say, look, man, what we should do actually is exhaust this sucker, your TSP, before you pull Social Security, and then take Social Security 1 year later. Now, we're not going to get that in this episode here today, but I mean, you got to know how the tax code works for single people, for folks with pensions, with TSPs, with IRAs, with 401ks. You've got to maximize this. I was just talking to a guy earlier today up in North Carolina. He's like, look, you got this his wife's got a pretty good pension as a teacher. They're going to have Social Security. They got 401k. And he wants to retire at 62. And I'm saying 62 to 70 is your golden years of tax planning. Use it wisely because you'll never get it back. And if you're not using it, the government will take it from you. And they're not going to say, oops, sorry. They're saying, thank you. We need the money. Thank you. So let's go upstairs and see what California can do for us when it comes to tax code. I think you'll be pleasantly surprised by the state of California, actually. But then we'll show you a little bit more of some of the stuff we can do to absolve some of the tax burdens here. So again, if you find value out of this, you can go to my website at Heritage Wealth Planning. You can see the donate button at the very bottom, $5, $15, I don't even remember what the numbers are. I can't remember. You can do it monthly. I'm happy to receive your donation. Absolutely. I am a capitalist. If you find value in what I do and you want to say that's good, here's a couple of bucks for donation, I'd appreciate it. If you find value in what I do and say I don't want to give you money, but just watch my videos, I appreciate that too. Believe it or not, YouTube advertisers reward people like me when people stay engaged. So I much appreciate you being here. Subscribe, share this video, and let's go down to the calculator or the computer and we'll show you what else we're looking at. Thanks, guys.